Good afternoon. Welcome to OptionsTender. It's Friday, July 18th, 2025. Welcome, everybody. So, just to start off, in the Discord, we're swinging the big bat, the heavy bat, the fat pitch, whatever you call it in baseball. We're into some big swing positions here, and then I'm going to show you one of our trades that should work out very nicely, and I'll show you where the target, expiration, and what we're doing with that. Just to show you what I do for the individual analysis members, that's $4.99 a month. So I go through the trade alerts. The trade alerts are available to everybody in the Discord. It's 99 cents a month if you want to get these videos intraday that comes with the Discord. And so I'll show you exactly what we do with our main trades, I guess, official trades. Okay, so let's just jump into it. All right, if you're new here, don't forget to like and subscribe. So we have SPX on the daily and the 65. We'll go through all of our indicators as usual and check out the VIX on the daily time frame. All right, so we're at that historic trend line. This is a 100-year-old trend line. Yeah, you can argue we're above. We're in the same formation here. If we start to break out and get above and show some green candles at this point, you know, maybe that's considered a breakout. So keep your eye on that. I'm playing against this. This is such a wonderful opportunity to catch a top here. So I thought this was as well, and this was here. We also did at this point, and then if you were following along, we took our profits through here, and we added on for our swings. We added on our call hedges at support here, and this ended up being an extension. So this could have been a top. You have your, I'm not going to go through the whole wave count, but we had our 1, 2, 3, 4, and wave 5, which that was a 5-wave impulse to complete here. It could have been an ending diagonal, but it ended up being a leading diagonal, which is an extension. So this became a 1, 2, 3, and I'm counting this all as a 4 and a wave 5 to complete everything. Okay, let's go through the indicators here. We have our moving averages. We are above the 8. The momentum is up. We are in a bullish posture, but we are in the danger zone. This is an objective short right here, right now, as all of these were. Okay, if you're swinging and you feel like you're missing here, no, don't be wrong. We're gonna get a reversal. It's gonna happen. Everything indicates that. All right, and that's what we're going through today and each and every day. So don't forget to hit that notification bell. So here's our 20 moving average, a simple moving average here. That's our trend indicator. The trend's up, momentum's up. All right, so why the hell are you shorting this thing? Well, you can wait till all of this changes and the pattern changes, but I'm shorting it here now. So we were very patient through the week not to add on to any shorts here. We did here, and this with a gap up was a gift to the bears. All right, that's what this video is going to be called, a gift for the bears. All right, so we're in a bullish posture, but we're into resistance. McClellan oscillator. All right, bearish, negative divergences. The market is really weak, and as soon as those big tech stocks give up the move, the market's gonna fall. Okay, OptionsTender. Okay, I had to pause it there. I'm sure you don't want to hear my spin cycle in the washroom that's right behind the computer room. So we have our MACD with negative divergence. Again, today with the gap up, negative divergence, we're getting the crossover to the downside. It's just very, very sticky. You see this doesn't always occur this way. A lot of times you get the rollover and things change at a reversal. But you do have this one that was sticky right here. Holding it, each day it's going up, and you have these divergences, but you can also draw a triangle here where that broke down from. And that's how we determine that one rolled over. Some of them just roll over. And that's, I think this happens more often where it just rolls over. And then when you get to these areas where, the breadth is weak and the big tech stocks are holding everything up, that's when you get plays that just stay for a long time up above here. And that was this occurrence here. But if you look in the past, you'll see most of them are really fairly simple, and you just get a reversal off of it. You might get one divergence or so. Now we have a 3 peak here. If the RSI, negative divergence here. Negative divergence here. So when we see this roll over the slow stoke, that will give us a tailwind for the bearish situation. But right now we're going back to that overbought territory. This could roll over as soon as Monday or Tuesday. Looking at the McClellan oscillator, MACD, DMARC. We had we're going through this on the for the individual analysis, and we had a 9 count sell on the Magnificent 7 and also on NVIDIA. There's the SPX on 1, 2, nothing to see here. Awesome oscillator, negative divergence, that's going to end up playing out. And SPY. And we have, a lot of new people coming in here. So here's the money flow index. I know I sound redundant, but I have to repeat myself for the new folks that are subscribing. And I thank you all for the support. So you have the money flow index, one of my favorite indicators to catch turns here. These catch all of these turns. It catches all of them. But you have these divergences that take time. We talk about that. We just talked about it every video. Okay, you have this divergence here. It caught the divergence, but it took 10 days plus. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. It took almost a month, basically, for this to reverse. So it just takes time, or what is that? 15, 16, yeah, about 3 weeks for that to turn. So these take time, even in this time frame right here. This takes time. You see a lot of volatility in there, and then you get that divergence. It took this one took altogether 3 months or so. All right, so it's taking time for this divergence to play out, but it will play out. I promise you, it will. So you have the negative divergence with this new high here today again, and that's even lower down here. So this is distribution. This is accumulation. Distribution is happening. Bollinger Band, no setup there. LA oscillator, just again, it tells us we're in that 5th wave, 3 to 5. Let's go check out the VIX. All right, the VIX is still in this pattern. We have our low. Our low is in on the VIX. We're in a rising phase. Right now, I think this is setting up for a higher low. This setting up positive structure. We didn't have any positive structure in all of this falling wedge here. And now we're starting to create a higher low. And this is a possible reversal candle. And we should see some follow through after that. When we get above 19, the market should be well on its way to the downside. SPY on the 65. If you want to see the targets, check out the weekly analysis, or you could wait till tomorrow as well. And I'll show you exactly where I think things are going and give the bullish and bearish scenario. Both are pointing to a correction happening at minimum. So don't think I'm just looking for a top and that's it. Okay, so this is, wait, let's go to our traditional bearish rising wedge. We had our extension for wave 2. We got a wave 3, formed another wedge, broke down from it. Now we're just kind of going sideways. You could count this as an ending diagonal with this as a 1, 2, 3, 4, and 5. That's fine. It doesn't really matter. I have this as a wave 3 and all of this as a running flat for 4 and then a fifth wave here. It doesn't really matter. It all creates the same divergences and the same pattern. So we have our moving averages. We're kind of sitting on that right now, getting a little reaction off of there. Here's the MACD, getting that negative divergence here. And when this rolls over, that's when we should see our move to the downside starting. So here RSI still made a divergence, burned through this one, but overall, after this correction, made a lower high here. So do we get one more in this near term after this high? Do we go up and catch another high right there? Sure, I guess that's possible. Again, I'm swinging out later dates, so I'm not looking for a new high, but that could create a negative divergence in the very near term. All right, if it does. And we're getting the sell signal on the slow stoke. DMARC, got our 9 count sell, gapped up, and are reversing off of that. So we got our 13.9 right here. That was sell signal. So that's going to cause either a correction here or a reversal. Awesome oscillator, starting to go up a little bit, getting green. We're not, I'm telling you, we're not starting a new cycle to the upside. This is just a negative divergence, and this represents this last move here. Money flow index. So we have the divergence in this near term. We had a correction already, so this could be its own move itself. Let's see where this ends up. If it ends up red in this overbought territory, that's just as good as us getting those divergences. So, you know, when we get these divergences, this played out, got a lower high, that played out. So it can give you a sell, just a correction, or it can give you the actual reversal. We're looking for the bigger, higher time frame reversals. So in this near term, again, this could just be overbought or just a little tiny, that was a correction here, and we get one more, you know, point or two higher and cause this to get a negative divergence in the near term. Bollinger Band, got a sell off there. There was a sell signal right there, overbought into the top of the band. Elliott oscillator, and again, this gave us a correction, and so this technically is still a divergence off of these other highs here. But let's see what happens in this near term. Does this have a high and this gets a lower high right here? With this a little higher high? I'm not playing these $1.50 moves here. So looking for a reversal once again. All right, that's it for that. Now I just want to show you the trade we took here. Let me look. So we took the SPY. Where am I at here? Okay, our expiration is 7/25. That's next Friday. So let's mark that. And you can hear that washer in the background. Sorry, guys. Spin cycle. It's right against the back of the computer room. So that's going to be our expiration. There, and our strike is a 627. Strike price is 627, and so you see it's near the money. We took this at the open here, so we're up 12% here, $36. But we're looking for this to be in the money, easy trade. But where we're going to take this, where we're going to sell this, is approximately 5 points from here because we just want a quick double on this one because the expiration's next week. So we're at about, let's call it 622. And so we'll go ahead and sell at this 622. Take profit here. And you see that's not that far away. It's just about 5 points or so away. And that will give us, we bought it for $2.94. And we should get out at about, I'm setting mine for $6. And if we get this reversal, even if price happens here, we have plenty of time for this to execute. We're into a support area, a little bit lower here. It just should be an easy trade if we're getting this reversal. And the options expected move next week could easily be 10 points to the downside, which would be 617. Again, if we get that reversal, we should see that lower end. This is the second week that we're kind of trying the same pattern. And I think we did it here. Yeah, I think I told you that we did not trade. I think we traded this one and this peak. All right, light positions. We weren't swinging for the fences. I think that's what it is. Swinging for the fences. Sorry. So we are swinging for the fences on this one. But this one here and this one here, I believe we took trades for the lower end of the options expected move. And I give all those expected moves to the individual traders, even for all of our individual names here. I do the options expected move for you, and I give those on the weekend all the way up here, any of these names. And by request, if anybody wants any other names, I'll give you the options expected move. And so that's our trade. I will look for this to happen. I'll put a trade alert just to remind me that hits, and I'll let you guys know. And we do this each and every day, so we'll talk about how this ends up going into next week. Now we could get a little bit of a sell-off today if we want to get a reversal candle on the weekly time frame. And I'm not naive to the fact that we're looking at a monthly candle too for a reversal. So just be on the lookout that we want to take this trade off quickly. Our other trades the expirations are well out a couple weeks, because we know that July could end up being a doji candle on the monthly time frame. And so we don't want to just be theta decayed to death. But we should still see a little bit of volatility in that move, even if it's going to be a doji on the monthly time frame. And we have, I believe, 2 more weeks left, 2 more trading weeks, or at least 1.5 on that. So, all right. So we're looking for just a little move to the downside. I get a quick double on there, and that's a beautiful trade. Doubles aren't, that's not what. That's like a double, right? Instead of a single hit. Why am I talking all baseball? Maybe because we're in baseball season. But we're looking for a single or a double, not a single on this one. Most people do singles, and that's fine. I'm a swing trader, so I don't really take profit on, on 25% moves or so. I usually have mine at 100, 200% on those moves. So if not, then I let my option usually go all the way out. I usually don't take, unless I'm going deep in the money, I usually don't take them off with a loss. Now, in the Discord, you've seen that I have done that in the past, but again, that's for those options. Like, for example, this trade, I won't set a stop, but if it continues maybe if this is a 1-2 and it continues to go against me and I have $1 left on it, I'll take that $1 and I'll do something else with it instead of the and take a loss on that. But most of the other trades the actual option will be worth $1, and so I just let that go through. That will be my risk, is the whole $1.05 that I might take on a trade. I think that's a very fair way to play it. That's my style, but you have to play off of yours. So let's see how this goes. And you guys, I'll see you in the weekend video. Don't forget to like and subscribe, and don't forget, winter is coming.